Hey everyone, welcome so much. Thanks for coming to our Exfinia webinar presentation. My name is Natalia Urquiaga. I'll be your host today to kind of facilitate this webinar for you guys. Again, thank you so much for taking time out of your day to listen in. It's very important to keep ourselves up to date and know what's out there, especially when it comes to our finances. So really glad that you guys are taking time out of your hands. Your first presenter is going to be Karyna. So she is the president of our company, Exfinia Financial Services. And then later we will have a special guest for you, Briseida Luna. So I will go ahead and make sure to present each of them to you. And so without further ado, for your first presenter, as I mentioned, Karyna Gutierrez, she's our president of Exfinia Financial Services. She graduated let me see if I pronounce that right, salutatorian from the Monterrey Institute of Technology with a major in public accounting and a specialization in international finance. Karyna started her professional career in finance 26 years ago, working for a financial engineering firm called Profit, located in Monterrey, Mexico. Karyna then worked for a financial advisory firm in the Woodlands, Texas, providing investment advice to high net worth clientele in Latin America, Switzerland, and the United States. And her ability to establish business and personal relationships is one of the key strengths of Exfinia's executive team. So without further ado, Karyna, if you can activate your camera and microphone. Hi, Karyna.
Hi, thank you, Natalia, for the introduction. Welcome, everyone, and let's start the presentation. So we are going to talk about different options to invest in real estate. As you know, sometimes real estate investments can, of course, produce very attractive returns, but they could require, in most of the time, they can require high levels of expertise and a high level of capital to get started. They can require a lot of time as well. And sometimes, because of all these limitations, are not accessible for everyone. So the solution that you have here is to be able to invest in private vehicles that are backed by real estate. And that's what we are going to talk about today. And what are some of the benefits of investing in real estate? Well, the first one is that you can get attractive returns without the volatility of the stock market. You know that you can get a fixed return. Also, in some investments, you can produce a passive income, which is a very attractive feature for some of our clients. The investments are backed by a solid collateral, which is real estate, and the collateral could appreciate, and that will solidify the investment even more. And also, in some areas where the long-term demand can be predictable, well, that will make also the investment very predictable. Like right now, we are focusing on Texas because in Texas, we have a solid long-term historic return. So that could be very attractive for some of our clients. So we are going to talk about three different options. The first options are private loans, the second one, rental properties, and the third option, residential development. We're going to start with the private loans. You know that sometimes there are real estate investors that have most of their capital invested already in real estate properties. So they are constantly looking for new opportunities, but most of the time they don't have liquidity. So they go with private lenders, and they offer them as collateral real estate properties that are already paid in full. So they go with this collateral, and let's assume that the property is worth $100,000. They go with the private lender, they give that property as collateral, and they ask them, okay, how much can you lend me? How much can I get from this property that I'm giving you as collateral? Usually the private lender will give them between 50 to 70% of the value of that property. And that's the loan that they will get. And they will pay to the private lender an interest. And then there is your account where you have liquid money that is earning nothing if it's sitting in the bank. So you can lend money to the private lender, and the private lender could pay you a fixed return. But all your investment is backed by that real estate property that was given as collateral. So this is the explanation. We have a developer or a real estate investor that requests a loan from this lender. The lender sends an appraiser to make sure that the value of the property is a certain amount. Once that value is determined, the maximum loan he will offer to the developer is between 50 to 70% of the value of that collateral. Okay, and this developer will offer that property as collateral, and he will be paying monthly interest to the lender. The lender receives monthly interest, of course, from the developer, but then there's you, the client, that you have money, as I said, sitting in the bank. You would like to invest it to earn a higher return. You make a loan to the lender that is backed by this collateral that the developer provided. And you will receive monthly interest from the lender. So everything is backed by this real estate property. So what are the terms? The interest rate that you will get is 5%. The investment horizon could vary between 6 months and 24 months, depending on when the loan is paid. The minimum investment is $20,000. And then you will get paid monthly interest, and your principal will be refunded once the loan is repaid or when you request the money. You need to have the money invested at least 12 months, and you can request your money at any time after 12 months. All you need to give is a 90-day notice, and in 90 days or less, you will get your money back. So these are the terms for this first option, private loans. 5% return, the money could be invested between 6 and 24 months. The minimum amount is $20,000, and your commitment is only 12 months. After 12 months, at any time, you can request your money, and you just need to give a 90-day notice. In 90 days or less, you will get your money. The second options are rental properties. And in this case, you will not be lending money. You will be buying a property in conjunction with an administrator, an expert in real estate. And how does it work? We have this rental property. The property manager will contribute 70% of the money. You will contribute 30% of the money. So in conjunction, you will buy that rental property. In order for this property manager to decide that this is a good option, this rental property is a good option to buy, two things need to happen. First, he needs to be able to purchase the property at a minimum of 15% discount below market value. That's the first requirement. And the second one, after doing all the numbers, he needs to get a 7% net annual rent equivalent, which means net of all the expenses incurred in having a rental property, like taxes, maintenance, insurance, and property management. If those two things are checked, then he decides that this is a good property to buy, and then you will buy it together, but you will have that peace of mind that an expert in real estate will be contributing 70% of the money in that property deal. So the plan is to keep the property rented for 2 to 3 years. And once the property has appreciated, or once they think it's a good time to sell, they will sell it, and you will receive your money back and the appreciation, if there was some appreciation in the property. In this case, you're renting the property together, and you are receiving monthly income from the rent as long as that property is rented. If, let's say, 1 month the property is vacant, and then it took a few days or a few weeks to paint it, change carpet, and get it rented again. Well, if there was 1 month that wasn't rented, of course, that month you will not receive the rent until the property is rented as quickly as possible. But of course, this property manager is going to make all the effort to make this property as profitable as possible. So in this case, the terms are, well, you will get at least 7%, because those are the numbers that the administrator is looking for. The rate of return could be higher if the property increases in value. So it could go up to 9, 10, 12%, depending on the appreciation of the property. The investment horizon here is between 21 and 36 months. The minimum investment is $50,000. And as I explained before, the investor, like you, the client, will invest only 30% of the money, and the property manager will invest 70% of the money. The cash flow, well, you will receive monthly rents as long as that property is rented, and the money will be refunded when the property is sold. Okay, and remember that these are the requirements in order for that property to be bought by the administrator, that the properties need to be purchased at least 15% below market value. And of course, they need to offer a net return, net of all the expenses, of at least 7%. The property is rented for 2 to 3 years and then sold to a third party. And then you could get an estimated rate of return of around 9% or more, depending on the appreciation of that property. But remember, in this case, is different than in the previous case. In this case, you are acting as an investor, so the returns are not guaranteed because it depends on the appreciation of the real estate property. In the example number 1, with the private lenders, your return is guaranteed. You will get a fixed 5% return because you are making a loan. You're receiving a promissory note, and they are committed to pay you a 5% annual return. In this case, it's an investment. You participate, of course, of the risk, but you participate also of the potential of the appreciation. The third option is residential development, but it's a very specific one. There are lots in the city, in the first around 610, for example, in Houston, in the first loop, around the first loop, and that have very good lots, very well located, nice size, but they have very old properties. So what they do is the developers buy them in advance, they demolish whatever is there, and they develop it to build neighborhoods that are gated with townhomes, modern townhomes around 2,000 square feet, that they will have a final sales price between $300, $350, up to $400,000. Why that final price range? Because even if a real estate downturn arrives, that price range is always being active. There's a lot of people that have their big homes in the suburbs. When they become empty nesters, they sell their big home and they downsize to these type of properties. They don't want to commute anymore. They want to live closer to work. That's one of the markets that is always buying these type of properties. Another one is real estate investors. They like this type of properties because they use them as rentals. These are affordable rentals as well. So that's why we are only focusing in this residential market with the price range, as I said, between $300, $350, up to $400,000, no more than that. So the program, the developer buys the land. They give you a promissory note as well, because you're going to make a loan to that developer. And that developer has the land, he will invest to develop that land. So your collateral is only going to increase in value as they are building that property. When those properties are sold, then they return your principal plus the interest. Now, what will happen if those properties are sold before 12 months? Let's assume we have an early sale of 10 months. At 10 months, you're going to receive your money back, and they are going to pay you the interest as if the money was invested the full 12 months. So your net rate of return is going to increase because they gave you your money back early. Now, if the opposite happens, let's assume the project is finished in 13 months. In month 13, they are going to give you your money back, and they are going to pay the interest for the full 13 months that the money was invested. So these are the specifics. The rate of return fixed, guaranteed by the builder, because he's signing a promissory note and he's giving you a personal guarantee. They're going to be paying 8% annually. Your investment horizon could be between 12 and 24 months maximum. The minimum investment is $70,000 and or in multiples of 70,000. So you can invest 70 or 140, 210, 280, so on and so forth. The minimum investment for an investor's visa, because sometimes people use this program to get an investor's visa, will be $210,000. But that is a program that you analyze with an immigration lawyer. They are the ones that process all the investor's visa. If a person, a foreign national, wants to move to live to the US, we just handle the real estate investment that they are going to use to get that investor's visa. The capital is refunded when the property is sold. As I explained, if the property is sold before 12 months, the full year of interest will be paid, even though your money was returned in advance. If the properties are sold in 13 months or more, the monthly interest accrued until the property is sold. Okay, so those are the terms for the three options. And the areas of opportunity right now, we are concentrating in Texas. Texas is a very solid market, so we are concentrating mainly in Houston, Dallas, Austin, and San Antonio. And the experience that the groups that we work with have. These groups, they have extensive experience in land development, in single-family residence remodeling and construction, also in multifamily building purchase, management and resale, and also in residential subdivision and development. Bare minimum, they have 30 years of experience working in real estate, both in the US and in Mexico. Bare minimum, they have over 100 million in historical transactions, or at least 500 or more residential and commercial real estate. So this is my contact information. Thank you.
Thank you so much, Karyna. So for the next speaker, so again, as mentioned before, if there are any questions, please hold on to those questions and we will open the chat at the end. But right now, I'm very pleased to present our real estate attorney, Briseida Luna.
Hello.
Hi, Briseida.
How are you?
Good. So everyone, Briseida Luna is one of our founding partners at, let me hope I'm saying that right, La Rochelle Luna, P.C. I hope I didn't butcher that. So Mrs. Luna's practice focuses on real estate and estate planning. Her other specialties includes contracts, franchising, and mergers and acquisition. Mrs. Luna earned her Bachelor of Science degree in Economics and Biology from Baylor University in 2003. Mrs. Luna also studied philosophy and law at Oxford University in England. She then attended law school in California at the University of Laverne College of Law and graduated at the top of her class, cum laude. She also is licensed in practice law in the state of Texas and the United States District Court for the Southern District of Texas since 2009. Attorney Luna is also very active in the Hispanic community, doing pro bono work and educating Latinos on the importance of having an estate plan if they reside and own property in the United States. So without further ado, Luna, up to you.
Okay, great. Thank you so much for that introduction, Natalia. Welcome, everyone. Thank you for joining us. I am Attorney Bri Luna, and my presentation will be discussing what are the top 7 most commonly asked questions for real estate attorneys. We get a lot of questions on the regularly, and we would like to address some of those today. Real briefly, I'd like to discuss our mission statement. So at La Rochelle Luna PC, our attorneys and our staff, we like to solve our clients' problems. One of the things I have noticed that clients over the years have complained about attorneys in general is that they don't listen to them. So we really try to focus on listening to what our clients are asking us for and really digesting that, understanding what their needs are, and delivering results. Because at the end of the day, that's why they come to us, to solve an emotional and a legal problem. And it really is an emotional problem because usually your legal problems become emotional. So we have developed several different ways to do that. And what we do is we practice in 3 ways. With integrity, we implement flat fees, and we've done this obviously since the pandemic. Everybody has had to restructure to make clients more aware of how much it is that things are going to cost them. They already have a lot of uncertainty going on in the world, so they want to know, okay, how much is this going to cost them? So we try to really work with them with flat fees, and we deliver real results. We're always trying to deliver the results that they ask. We have free consultations initially on the phone. You can schedule those on our website at l2legal.com. You can schedule those by calling our receptionist, and my assistant will definitely assist you in setting up a free consultation. Next slide, please. Okay, she's already done my introduction, so you guys can see all of our information there, our phone number, our email, my email, and our website. Okay, moving on to the most commonly asked questions. The first question, how can I set up an LLC? So this is a question that has been asked of us for decades, since we've been practicing. And what we recommend is, how do you set it up? You basically call an attorney. A licensed attorney is the best person to do this, not a notary. I know in a lot of different countries that people are from, maybe in Latin America and South America and Mexico, a notary is a licensed attorney. That is not the case in the United States. My assistants are all notaries, and basically it is a very simple process that does not require any legal education. And so it is important that you go to an actual attorney. A CPA is also probably not the best person to form an LLC, because a CPA is specialized in numbers and in doing taxes and other types of projects. Now, we do work alongside many CPAs when we do different structures for our clients. So we work with CPAs, we work with consultants, and we ourselves have a team depending on the client's needs. If we know we have architects, engineers, whatever it is that business consultants that specific project requires. So to set up an LLC, this step protects you from personal liability. So what does that mean? That means that if you want to start doing real estate investments, as Karyna just explained, so many different amazing opportunities, then you want to make sure you and your family are protected from someone coming and suing you in an individual capacity. So someone doesn't sue you and goes after any of your personal assets, that you work very hard for you and your loved ones. So obviously there's exempt property like homesteads, etc., but you definitely want to set up an LLC or a viable entity. In the case of real estate investments, it's typically a limited liability company. When we form these, we do an entire package for our clients, which includes an EIN, which includes organizational minutes, resolutions where they can take to their banking institution to set up a bank account. And we also do an operating agreement between all of the members of the LLC. They are not called partners in an LLC, they're called members. So we do an entire package for them with a cover letter that explains everything, how the whole process works. So that will help you. Like it says here, forming an LLC can help prevent partnership disputes because everything is delineated in that operating agreement. So that way no one has to wonder what will happen if I get a divorce, what will happen if we separate as members, what will happen if I die. So that is all in that document. So everybody knows, and it says here in an operating agreement, it states exactly what it is that you do in the case of a death or of a removal of a partner. And lastly, an LLC can help to keep track of your accounting and also keep your personal and your business accounts separate. You want to do this because in litigation, there's something that exists called piercing the corporate veil. And you don't want someone to be able to do that if they sue you because you didn't keep your personal and your business expenses separate. Next slide, please. Okay. So another commonly asked question, I'm worried about leaving my loved ones unprotected. How do I set up a will? This is something we've been getting asked more and more ever since the pandemic, obviously. And so even now is very important, especially we spend a lot of time educating the Hispanic community and, a lot of the European cultures, Asian cultures, Indian cultures. I've had all of these types of clients, and what I've noticed is they are more reluctant usually, or they were in the past, to set up wills. But in the United States, it's a very important process to take, because if you don't leave a will, then you actually leave a lot of problems, expenses for your loved ones after your death. So this is something very common. This is something that people shouldn't be afraid to speak about, because it's going to happen to all of us one day, and it's something we can help you with, and you don't have to do this alone. So a will ensures that your wishes are heard, and that states that whatever personal belongings and assets you have will go to your family or any beneficiary of your designation. So that is important. You want to be able to dictate who it is that is going to receive all of your, your hard-earned assets and income. And the way to do that is to leave it structured in a will. Otherwise, the state of Texas will do it for you, and they may or may not do it in the way that you wanted to leave it to your loved ones. So that is important. Without a will, a court makes these decisions on your behalf, among others, through a lengthy and often very stressful process for your heirs. This is a process called probate. So you can go to probate with a will, or you can go to probate without a will. So whenever we handle probate for our clients, when the case of a loved one, we help assist them to administer the estate. Someone needs to administer your estate, usually one of your children. And the way we do it is we help them through the whole process. But it's much easier and it's much less expensive if there is a valid will. And so if you were to die suddenly without a will, you will inadvertently subject your family and loved ones to unnecessary confusion, anxiety, stress, headache, and that's the last thing they want during that difficult time. So a will at any stage in your life should do the following: appoint a guardian if you have any children that are minor under the age of 18, appoint an executor to administer your estate, or to administer your will, and spell out specifically how do you want all of your property and your assets to be distributed. Next slide. Okay. Can I evict my tenant? Yes. The Justice of the Peace courts handle all of eviction trials. At that point, if there is an appeal, then it goes up to county court. And also, most of those we handle are in Harris County, Montgomery County, Fort Bend County, but we also handle all of Texas. Depending on the county, they're being done through Zoom at this time, but they're also starting to open up the courts in the month of June. There's going to be a lot of changes in this month, and we are going to be able to start going in person again. So if someone has not paid you rent, if they're delayed, or if you're on a month-to-month tenancy, that's another common question, and you don't want to renew, that's another reason that sometimes landlords have to get tenants out because they will not leave on their own. So what the process is of evicting a tenant is that you want to get possession. You're asking the court to give you possession again of the property. And you have to do it through the legal process, and you have to have an order. You cannot just go and lock your tenant out because that's actually illegal. So there is a process for this to get, even if it is your property, to get it back if someone is there that has not paid rent. It is important to do your due diligence when picking tenants for rental properties. I can't stress this enough. I always tell my clients, realtors, landlords, owners of real estate investment properties to always do your due diligence beforehand, know who's coming into your property, and do as much background check as you can. Get financial statements, get W-2, get pay stubs, so you actually have an idea of who is getting into your property and have less surprises, and on the back end have to resort to an eviction through an attorney like myself. So we have two phases of evictions, as I mentioned. There's a notice of default. So usually when we get hired to handle an eviction process, it's a flat fee, and we include a notice of default and termination that we send out certified mail as per the Texas Property Code to the tenant who is in violation, or the tenants. And then the second phase is to filing of a lawsuit in the JP court that I mentioned earlier. Next slide. Okay, what are the risks associated with hiring a builder? This is another question that is very relevant to Karyna's presentation, and is also a question that we get asked a lot. Many, over all of the years that I've been practicing, over a decade now, and the other attorneys at the firm, combined, we have decades of experience in real estate law, and we get this question all the time. So everything from the building process, permitting process, and the financial process, that all involves a risk. So we recommend that when you're hiring a builder, a developer, that you do your due diligence and that you have a team with you. You either have a team that finds the builder and the developer for you, like Karyna was mentioning, or you build your own team, and that team should include a CPA, usually a good realtor or a financial advisor, and also a good real estate attorney to draft all of the documents and make sure everybody's on the same page. So an attorney can review all of the contracts and with you in detail and potentially make changes that will work in your favor. So a lot of times builder agreements are already drafted by the builder, and people believe that they can't negotiate them. That is not true. You can actually negotiate those contracts, and you can send them back to the builder with changes and have your attorney review it and explain it to you as well what all of the different provisions mean, especially the default provision, which is always very important in a contract, which means what happens if someone fails to perform on one side or the other. Okay, so that's a very important provision. And always remember that every contract is negotiable and that there are risks inherently associated with them. And that's why it's best to make sure that you draft and negotiate those contracts in the best way on the preventative side, which is when you sign, before you sign the contract, not after, and then there is a problem, a disaster that has to be fixed, and then it's more costly than if it would have been already written. So handshakes, things like that are discouraged, especially in Texas. Everything should be done in writing. Next slide, please. Okay, so one common question that we get asked, and I know I mentioned this earlier, but during COVID-19, how do you set up an LLC? The process is exactly the same. That hasn't been affected in any way. So we recommend that if you do want to set up an LLC, you give us a call and we can help you, guide you through the entire process. If you want to start investing in real estate in the state of Texas, we can help you anywhere in the state. It could be San Antonio, Dallas, Corpus. We have clients in various cities where we just handled, for example, foreclosure in Corpus Christi. So that is something that people have been asking. Does anything change because of COVID? No, at this time, it's still the same. Next slide. So one thing I get, one of the services that we provide, and that question that we get asked is, do we provide escrow services? Yes, we do. Escrow services is a legal arrangement in which a third party temporarily holds a large sum of money or property until a particular condition has been met. For example, the fulfillment of a purchase agreement or builder draws on a loan. So what does this mean? It means that many times, especially when there are foreign investors involved, clients ask us to hold money for them because they don't want the money to go directly to the builder or directly to the buyer or the seller because of some condition. Something has not been met, for example. And so they give the funds to a licensed escrow officer, which is myself, our law firm, because we have special accounts that are made for clients to be able to put money in escrow, and those are governed by the Texas, the state. So we are able to do that, and we are a licensed person to do that. You can leave the money in trust with our firm, and we guarantee that it will be, safely reach the hands of the final party that it's supposed to reach after the conditions have been met. There are releases that have to be signed, and everybody has to sign them before the funds are released to them. For example, with builder draws, when a builder is working on different phases of a project, usually we hold the money until they're done with one aspect, for example, the framing or the foundation or the plumbing. And every time they get a draw, they contact us. We send out an inspection company to make sure and ensure everything's been done, and then we release the funds. Okay, so this is a position of trust, a relationship of trust with us and our clients, and we value this very highly, and we take it very, very seriously. This type of arrangement is very common for, as I mentioned, our foreign and international investors. Escrow services give our clients peace of mind and a sense of security. Why? Because they know that their funds are being delivered to the United States or to the other person through a licensed attorney, and someone's not just going to run off with their money or different concerns that a lot of my foreign investors do have. We have done this many times in the past when we've done franchising with restaurants, with hotels, and we have a foreign investor, sending hundreds of thousands of dollars to the United States. Obviously, that is a lot of money, and they want to make sure that it's done, through a licensed officer that can provide these services. So a licensed Texas attorney, as I mentioned, we have what are called IOLTA accounts. And so these are special accounts that only attorneys can have. And these accounts provide assurances that a client's funds will be kept safely until their release is needed, okay? And this also prevents fraud and stealing from third parties, okay? Next slide. Okay, I want to do a joint venture and provide the capital funding for a project. How do I protect my investment? This is a wonderful question that we get asked regularly because a lot of people in Houston are real estate investors. I would say a very, very large percentage. So it is important to have properly structured legal documents before giving any monies whatsoever to any party or partner in an investment. I cannot stress this enough. It is super, super important that you have the right structure of your legal documents and that you seek a professional like myself to assist you through this process. Why? Because we have the experience. We've done this over and over and over again, because we don't want to see you have to end up spending more money and have higher attorney's costs and fees on the back end if there is litigation. That is a far more costly process than just structuring the documents accurately on the front end and doing the contracts correctly. So there are several reasons why it is important that you don't do this on your own, that you have a team and that you have someone who's experienced in this that can assist you with this. The right set of documents will protect you in case there is a non-payment, for example, of the loan that you're providing. Like in Karyna's presentation, if there is an investor providing large sums of money, typically 6 digits, then you want to make sure that if the borrower defaults, you are protected with documents like deeds of trust, warranty deeds with vendor's lien, promissory notes, personal guarantees. These are just some of the documents that we usually draft to protect our client. Now, that brings up a great point, which is when I am representing one side versus another, I don't usually represent, I'm not neutral. I represent either the investor or the builder, or I typically represent investors, though. I always draft the documents in a way to protect my clients and their best interest. And so obviously the other party could have their own attorney and we can do back and forth, what are called red lines. But we always will try to seek out the maximum amount of benefit and protection for our clients, at least when we draft documents. That is part of our mission and our values. So, and then contact an experienced real estate attorney to assist you in the drafting and negotiating of all documents associated with capital funding, to ensure prompt collecting of all payments, and to perform your own due diligence as well. When we're involved in this process, we also educate and assess and recommend to our clients that they do a due diligence checklist, which we can provide. And so depending on how much you want us as your attorneys involved, or how little, we can work at any stage in the process. We can start in step 1 in the due diligence, or we can just work on the documents themselves. Once everything's been negotiated between the parties, we just get a list of this is what we agreed upon. We agreed upon XYZ, and this is, please draft the documents. Or we can start at the very, very beginning and help. It just depends on the client. So always remember that an ounce of prevention is worth a pound of cure. It's very, very important, because when people come to me after the problem has initiated and the litigation, it's always a much more expensive lesson, because I am able to help them. We do handle real estate litigation. However, the pricing is no longer flat fees, and you can no longer predict what's going to happen, because there are so many moving parties and factors and judges and opposing counsel in a litigation process. That is all I have for today. Again, we practice with integrity, client focus in mind, and with excellence and knowledge of what is going to be the best thing for our clients. We also practice a lot referral business, and we get tons of referrals from existing clients. I have old clients always coming back, our past clients, because of the way we operate. In a non-traditional, we try to be attorneys with the difference, which is not, let's see what is the most we can charge this client. No, we don't do that. It's, let's see what can work for both of us and how can we get this fixed in the fastest way so this client is happy and comes back to us and refers us business. It's not, okay, like in some cases where, an attorney might look out for their best interest. I've seen that in many instances. We do not operate that way, and we like to make our clients happy, and happy clients send us more business. So that is what we strive for.
We thank you guys for taking time out of your day. Hope this was informative. Have a great day.